passive investing, it doesn't necessarily have to be boring. In fact, it can be interesting, effective, and great for your portfolio. And who better to talk about this than Rishi Kohli, the CIO of Jio BlackRock AMC. One half of this entity is a global expert in passive investing, and obviously that'll rub off on the investment decisions that you make and the decisions that you make with regard to construction of products. Talk to me, and first of all, thanks so much for taking the time, for coming by. Talk to me about the suite of products that you've currently set up, and there's another one that's closing today. So what does the suite look like right now, and what's the roadmap going forward?
Sure. So yes, this is the 13th fund whose NFO is going on and closing today. We started back in June, July with the first suite of funds, which we call cash funds globally, which is liquid, money market, and overnight fund. Yeah. And then we started the index funds, the equity index funds in August, which was Nifty, Next 50, small cap, mid cap, and also a small G-Sec 8 to 13-year fixed income index. And then we launched the first active equity fund, which was the Flexi Cap fund, based on BlackRock's global systematic active equity approach. Then an arbitrage fund, and then low duration and short duration funds early in Jan. And now this is the sector rotation fund, which is the second active equity fund that we are launching, which is, the NFO is closing today. And the thought process has been more like, how would investors invest, right? Especially first-time investors. Because the whole goal of the JV has been to increase financial inclusion across the length and breadth of the country, using Jio's digital reach as well. So, anyone who's not invested in mutual funds, but everyone in India has money in FDs, first they will move some of that money from FD to a liquid fund kind of thing.
So, but specifically for you and the kind of flows that you've seen into your own schemes, and what you're trying to do is quite interesting in the way that you're distributing the product. What is the kind of flows that you're seeing? Because you've got already one active fund. Today, the one that you're looking at is what somebody would normally put in a satellite allocation, right? So how has the positioning been working out for you?
Yeah, so largely been good, taking on from what I was just saying and what you just asked. So post those cash funds, why index and then why active equity? Because that's how the transition for a new investor would happen, right? And in line with that, what we are seeing, not only in terms of the initial NFO related data, because that, sometimes initial funds, there'll be more excitement, going forward, there may be lesser excitement, but I think the digital adoption, since we were digital and direct, how that has happened and then how that is leading to regular flows is honestly what has been more interesting for me. And there, for both our equity index funds suite and the Jio BlackRock Flexi Cap active equity fund, pretty consistently we've been getting flows, every day through the digital channels.
So, but is it primarily SIP flows or is it lump sum flows?
It's a mix. It's a mix, but yes, SIP is a decent percentage, and that's why I think the SIP book is growing pretty well compared to what any other AMC has seen in the first initial phase of the first 6 months. Just to give some numbers and context around it, the Flexi Cap fund at NFO was just under 1,500 crores, around 1,470 crores or so. And as of today is 2,700 crores.
Okay.
And little bit is due to performance, but a large part of it is obviously consistent flows because markets have been pretty range bound since then.
Yeah, single digit, I would think, right?
Yeah.
So talk to me a little bit about the sector rotation fund, because one would assume that it fits into, like I said, that satellite allocation, because you would be able to take, my assumption, concentrated bets, relatively speaking, sector-wise.
No, I'll explain
how it works. So it's supposed to give you a diversified approach to sector allocation, but how does it work?
Yeah. So see, the background to that, I'll just explain for us 30 seconds and then go into the product. So globally, there's a lot of research. Obviously, BlackRock has done a lot of it, but even other large global AMCs, that there are 3 distinct sources of alpha. One is stock specific, second is sector specific, and third is what is globally called as factors or style specific. India, you have largely stock focused funds. Factor style is relatively recent, more participation of passives right now.
Yes.
Very few active funds and very mixed performance so far, right? But Again, globally, that is a very large piece. And sector-specific is another third area, which is sort of non-existent in India.
Yeah.
So which is why when we did our product suite, again, going back to the earlier discussion also, we said that, okay, this is a big gap. This is a big source of alpha globally and in India as per whatever simulations we've done. So why don't we bring a product out in that space? So what it means is that, let's say you as an investor have a lot of stock-specific funds in your portfolio. You're diversified because you may be doing some flexi, some large, some mid, or something else where you are trying to be non-correlated. But a sector-focused alpha approach is completely non-correlated to whatever else you may have in the portfolio, which is stock-specific. So which is why it deserves sort of a place in any portfolio. Why we say sort of satellite compared to flexi is because flexi can be the first active equity fund for any new first-time investor, for example.
Sure.
That investor, once he wants to move to other funds, he should look at sector.
Sure.
But everyone like you and me or others who have equity portfolios, which has other funds in the portfolio, for them, sector becomes a good next step rather than allocating to some other sector-specific fund.
So explain how the construction is done.
Yeah, so here, obviously, the other overarching theme we have and the differentiation we have at Jio BlackRock is the fully systematic approach.
Right.
Because I mentioned systematic active equity of BlackRock earlier. That is a very large division that BlackRock has globally on the active space and has had very strong performance over the last 10, 15, 20 years. So Flexi Cap was our first sort of fund completely on the systematic active equity approach. Sector rotation also takes the key elements from there and then adds some sector-based allocation tool rules around it. So what we do is that globally there's the GICS industry classification. And these are typical, financials and auto and consumer and whatever, which is what we typically all talk about as sectors. Then there's a level 2. So when you go to level 2, currently there are 25 sectors. And here a simple example is financials, where you have banks also, NBFCs also, and insurance companies also. Whereas these are 3 different sectors, right?
And capital marketplaces.
Yes. And these are different sectors actually. So when we go to level 2, we are able to do that analysis separately and treat them separately. So which is why we go to level 2, because that gives us more granularity and we can compare, etc. So we are using that level 2 classification. And out of those 25 sectors at any point in time, we will have 17 or 18 in the portfolio. So it is a very diversified sector approach that way.
Okay.
But coming back to your question on how active it is, etc. So in those 17, 18 sectors, there will be very active underweight, overweight calls being taken. So compared to the weightage a sector has in the benchmark, we will go from plus minus 10% on it. So for example, if a sector has a 10% weightage, we could be 0, we could be 20. And this overweight, underweight for all those 17, 18 sectors on average in the portfolio will change every month.
What is the determining factor for those changes?
And then everything that a typical fundamental macro analyst looks at, and many other obviously high frequency variables, because we look a lot at alternative data. So at a high level, there are 5 buckets. Valuation is one, growth and quality combined into the second. Third is analyst sentiment. So anything and everything you do around analyst estimates, target price changes, upgrades, downgrades, all of that we put as one separate bucket, because systematically you can actually harness that alpha around it. Fourth is broadly momentum. Momentum also includes industry momentum, relative momentum, seasonality kind of things. And also alternative data like job postings, because there is some momentum on whether the job postings are increasing, decreasing, right? And the fifth one is a macro bucket.
Okay.
Because obviously, based on where you are in the macro regime, you will have certain sectors doing better or poorer.
Yeah.
So
like,
that is...
For example, banks being preferred now over NBFCs because we're at the bottom of the rate cut cycle.
Yes, potentially.
Interesting.
So things like that, right? So obviously macro is an additional thing which was not there in our Flexi Cap, because that was bottom up, that was doing analysis at every stock level. Here, because it's top down, we are going sector down.
Sure.
So therefore macro becomes a very important bucket. The other 4, somewhere the signals are similar to what we use in Flexi, is just being constructed separately.
So very interesting. So therefore, it's not necessarily, it's not right to how is this classified? Where does it fit in your classification?
So that is driven by SEBI.
Yeah.
So this is under thematic.
But it's okay, which is why my misunderstanding when I initially asked you about this, it's not, it doesn't function like a thematic fund.
So see, whatever you know,
what
how
is the
SEBI
maximum
classifications
weightage
are
that
there.
you would have? What is the maximum weightage that you would have per sector or theme in that fund?
Yeah, so I think banking right now has the largest weight as per that sector too also.
Yeah.
I'm forgetting exactly, but somewhere in the 21-22% zone.
Okay.
And that can go plus minus 10, as I said. So that
Sure,
could
but
be
that's
12
still-
and that could be 32.
But 32 is okay, is the weightage that it has on the Nifty 50, so it's not really, or thereabouts.
If the model wants to go
I'm
over.
saying, I know.
Yeah.
But it's not that much.
Yeah.
It's not like a BFSI sector fund or thematic, BFSI
No, not at all,
thematic fund,
not at all.
Where everything is
Yeah.
that.
And that's the goal, right? So when I'm saying 17, 18 sectors out of 25, it
Yeah.
is already very widely diversified.
Yeah.
And then we are saying very active, overweight, underweight, changing every month.
Very interesting. Okay, fascinating conversation, and I think we've spent more time talking about this new scheme that you have, but exciting times, and thanks so much for taking the time.
Thank you. Lovely talking.
That brings us to the end of this edition of Your Money Matters. Thanks so much for watching. Let us know what you think, and if there's something that you'd like us to talk about, let us know in the comment section, and we'll take it up. Stay tuned. This is NDTV Profit.